Good day, everyone. Well, the central banks continue to make no changes to their respective monetary policies, maintaining their neutral stance. But I do believe it was Dante who said the hottest places of hell are reserved for those who maintain their neutrality. Instead, these banks are jawboning about the idea of reducing levels of QE, but they don't actually take the action. They really can't. They're hamstrung. Most recently this week, Bank of Japan made no changes to its policy stance, but they did acknowledge that it's reaching its 2% inflation target. Well, rather that it would take until 2019 to get there. So that's yeah, okay, great. You're going to reach it, but it's going to take all the way out to 2019. Their current levels of inflation are less than what they estimated originally. And over in Europe, the ECB also decided to not touch its monetary policy. And the ECB president mentioned that their economy has continued to see economic expansion, whatever that means, but underlying inflation remains subdued, and blah, blah, blah. Essentially, I think the problem with inflation, it remains stubbornly low because there's lack of demand in these sluggish economies. And for these banks to even think about hiking rates or tapering their levels of QE, I think that's a pipe dream. It is further off, and I think the current record levels of QE may therefore remain for a longer period than expected. Naturally, the U.S. market, being the tallest standing midget, will continue to benefit from this as the sovereign debt bubble continues to grow. And also, we put out a chart yesterday that shows the corporate sector being the main buyer of U.S. stocks since the market low in 2009. And that's because of QE. This bull market, which is highly artificial and manipulated and aging, has been driven by this ongoing institutional buying. So when a company buys back its own stock, this has the effect of dropping the number of shares used to calculate EPS. So you get these artificially inflated earnings, and therefore the picture is artificially rosy. And meanwhile, you can see that when we get these little uptrends, they're in baby steps, and it seems like the markets are pushing on a string. They're reluctant to really undergo a proper uptrend because of the underlying backdrop being fairly pernicious and dangerous. That said, any additional rate hikes by the U.S. Fed could burst this debt bubble. There's the 3 steps and stumble, meaning that 3 or more rate hikes in the past is often enough to derail the current bull market. There's also what is known as proportionality when it comes to interest rates. In other words, since they're still near all-time lows, it wouldn't take much to flatten the yield curve just by hiking 3-month treasuries another 75 basis points. That's another 3 rate hikes of 25 basis points. And we've got one expected in December. Legendary bond king Bill Gross suggests that the top could well be in place before another 3 rate hikes, simply because of this proportionality effect, that the cost of short-term loans would jump in terms of where they are now to where they would be after 3 rate hikes. And smaller companies are depending on these short-term loans. They're the lifeblood of an economy. So if they were to go ahead and hike, once, twice, 3 times, 3 more times, then this would potentially reverse the recovery the Fed has attempted to engineer via QE. So the Fed's hands are tied, and these central banks around the world are tied up as well, because the Fed right now is attempting to refuel the interest rate tank by continuing to hike rates, which I know Yellen was saying, well, they might only have to hike 1 more time in December and then kind of let things sit. And I think that's probably the only choice they have. And the central banks around the world, the global ones, are seemingly going to just jawbone about reducing QE, but Meanwhile, the levels of QE are massive, and Bill Gross has actually also pointed out that if these global banks were to taper too quickly, that would cause a serious problem for U.S. stocks, because they're being fueled by all this QE at the moment, and will have been for many years now. I think we're in the 8th year of it. At any rate, it doesn't pay to try to predict these major market tops, because this QE effect can go for a lot longer than anyone expects. Bubbles tend to grow a lot larger than most market participants can ever predict. You know, you keep a close eye on your stops, because the market will leave price volume clues via your leading stocks. Those might be ones on our focus list or your own focus list. And historically, in the days leading up to any major correction, speaking from personal experience, my stocks always hit their stops. So I was always safely in cash before a major correction took hold. The process is dynamic, and it is highly dependent on remaining in the present, the power of now when it comes to trading, not trying to predict, but acting in real time as your stops are hit. And the same also applies to keeping an eye out for entry or re-entry points in stocks, especially after corrections. And we've seen a number of those profitable opportunities this year, even though the market hasn't really staged any meaningful corrections. Even if it has one or 2 days down of 2-3% correction, a lot of these leaders will correct 2 to 3 times that amount, but then they will stage undercut and rally formations, and those are quite formidable in terms of time value, because if you, first of all, when you have a stock that undercuts a prior low and then heads back above it, your risk level is typically less than 3%. And the nice thing about the undercut and rally is that when these things go, in other words, when markets tend to bounce and these leading stocks tend to readjust their overcorrection. So in other words, if they undercut and rally, you can often get a 2, 3, 4, 5% pop in a day, and over the next few days, often that leads to double-digit gain, maybe 10, 12%. So in this kind of market environment, that's great, because if you keep doing that, then by the end of the year, you're up a fair amount. As far as, let me just see here, on commodities are and oil. Well, oil's tried to bounce, and the CRB index has tried to stage a bounce as well over the last 4 weeks. But overall, the downtrend remains intact. I think that's an expression also of the lack of demand for commodities, because the global economy remains weak. So at any rate, with that, we can move on to the stock portion of this broadcast.
My favorite part. Yeah, I noticed on the USO, notice how it can't hold the 50-day moving average. And from my perspective, these names that I've talked about in the Voodoo report, not Fang, I'm sorry, Frac, Fang, it's all the same, right? This one actually posted a pocket pivot, you'll see, on Wednesday. And it's trying to break out of this range, but it failed. So, the thing here with the oils, and that would also apply to JAG, J-A-G, which is another one I talked about. These are only going to work if you see the price of oil blast through the 50-day moving average. So for me, if I'm playing these names, I'm keeping a close eye on the USO relative to the 50-day. And we can see that because oil didn't hold the 50-day moving average here, those names aren't working. So, you bail out and move on. So, and I think that's the case with anything that isn't working. But there are some stocks that continue to work. The AAOI, yesterday we put out on my focus list notes, I noted that it's 20% past its 10-day moving average. And when that happens, it's caught up quite a bit, but it was probably down here around closer to 75. And when you see that sort of extension, I mean, that's a reason to sell. I thought it was interesting. We got some emails from people wanting us to provide some guidance, and I think that's kind of dumb because you can't rely on us to tell you when to sell. So if I tell you it's 20% past the 10-day moving average, you know, you could take profits. Now you're going to sell. Don't you have a plan for where you're going to sell the stock when you buy it? You know, so it's interesting. Things get up like this, and then people want us to tell them when to buy it and when to sell it, you know, or when to sell it and take their profits. But you really have to figure that out ahead of time. So, you know, I
Yeah.
think in general, you can use some basic rules. How far extended past the 10-day or the 20-day or the 200-day or any of those are you? Okay, and at that point, you can kind of figure out maybe you're in a point where the stock might pull back. You were going to say something there, Dr. K?
Yeah, well, it's just pretty much a bridge to what you're saying right now. That is, in context with the stock's chart, you can develop your chart eye to see when the price is clearly ahead of itself, and that's, you know, where you should start taking at least partial profits. You know, maybe trade around the core position. I find that works nicely psychologically. In other words, you keep a core position for longer term moving averages, but you trade around it. So, you know, in a case like this, it's clearly gotten way ahead of itself price-wise, and you know, so, you know, yesterday you would be taking partial or full profits. I mean, it's quite ahead of itself. So again, it's contextual. So you might want to just, you know, make a clean break and wait for it to trace that back closer to the 10-day. Like it did today. It went down to what, 85 or something, and the 10 days about 82. So on a percentage basis, you know, maybe you reinitiate a core position that way. But you know, it could very well, you know, come back to the 10-day. It has a tendency to do that, where it actually gets much closer than it was today. And then yeah, there was some of these other ones, like we recommended, you know, the Yext stock twice now successfully, and 2 days ago, it, you know, relative to the chart, that looks pretty extended to my chart eye, and you know, I actually sold this one a little prematurely the day before.
Yeah, but you got a good profit on it. I did the same thing. So, and I'm not worried about that. You get 10% or so, 10, 15%. I think that actually was more, wasn't it? Was it? Yeah, it was about 10%. So up in here, once it got above 14, you get
Yeah.
10%, and that's pretty fast. So you take it. Now you're coming into the 10-day line. Maybe you can buy it back. I don't know. I'm still a bit skeptical of this market at this point, but we'll talk about that later. Go ahead.
Yeah, so anyway, it's you get a lot of these names. We put out a report on this one, but in terms of where we had suggested it, but this kind of setup occurs again and again, and you just have to be quick about it and diligent in terms of well, I mean, the focus list can provide you guidance, but that's not the end all be all. You could obviously see some stocks for yourself that might also fit that criteria, that are playable. You know, right now, I mean, the reason, I think, not knowing Gil's reason, but my presumption is that the market was starting to look tentative a couple days ago, and it had been up, what, 8 days in a row, and the VIX was near all-time lows, and things looked a little sketchy. So I thought, you know what, I'm going to take the profits here.
Yeah, and it comes flying right back in, and that's what they'll do. So you got to be active with these, I think, to some extent. And AAOI was kind of slam dunk. It's parabolic, but you know, I don't know. I think it's kind of silly when people start asking us for guidance. It's like, really? It's like, what do you think? We have some magic crystal ball that tells us when something's going to top out. I have no idea. This thing could set up again, meet up with the 10-day, so you don't have to sell it. Personally, for me, if it's 20% past the 10-day moving average, that's about all I'll give it. But I have my own extension indicator that I derive from the extension from moving averages, the average true range, percent, all this stuff. So, you know, it's not perfect, but it gets me out of stuff near the highs, and then the stocks will set up again. So you could sell in here and let it set up. But I don't know. I get a little irked when people start wanting us to tell them what to do, because that's just dumb, and it just confirms my theory that most people who invest are too stupid to invest. Sorry, but that's just a fact, you know. And it's amazed me that the lack of ability to use judgment, or the fear, rather, of using your own judgment, you know. But I know there's a lot of websites out there that promote the whole idea of dependence, and you need them to tell you everything. I don't buy that. I think it's a bunch of BS, and I'm not content to go that route. We prefer to teach people how to use their own judgment, and don't be afraid to use your own judgment. It's not going to be perfect, because mine never is, I guarantee you that, but it works, and that's all I need. Okay, so Ion's rule of 3. Stock is hated. Somebody's asking. I'm gonna rule of 3. I don't see what's the rule of 3 on this one. There you go. I like that statement. We have brains for learning, not following. Exactly. So you learn to use your brain, and don't be afraid to use it, you know. But, you know, give you some idea of things I look at it. It's like, how far are you extended from the moving averages, you know? And everybody wants some rule, you know. What rule do you use so I can not get shaken out of a stock? Well, I got news for you. You can't necessarily guarantee that you're going to get shaken out of a stock, you know. I think someone was asking me, they emailed me.
Actually, and just and Dakota said, if you don't like being whipsawed, then just don't trade. That's the perfect antidote to whipsaws.
Yeah, exactly. And I don't know, someone was asking me something about mule. I don't know if you're out there, Joe, but I wasn't really clear on what the question was. It's like, you buy it in here, okay, and it runs up. So I don't know, if I got a quick profit like that, I might take it and then try and buy it back on the pullback. I don't know what happens if you get shaken out or what, but if anytime you get shaken out, you can always buy something back. I mean, that's what the moving average undercut and rally does in my book for me. You know, if I get shaken out of something and I see a moving average, it rallies back above the 50-day moving average. So in this case, you know, it tried here. It failed. Okay, so if you bought it, you bail out, you wait. The next day it does clear, you buy it back, and then you get a nice move. So the other aspect to all this is that you're willing to come in and out of trades without worrying about where you bought it or sold it last. Okay, so somebody's saying, I want inability to clear what? I don't know. I think you're going to get too carried away with the rule of 3. I don't understand. So what? It's 1, 2, 3. It's going to work. I don't know why. I wouldn't worry about that. I would just watch the price volume action. Right now, you get a nice move off of these lows. It's probably an undercut and rally here. The low is 50.50 here. The low is 50.72. So you had an undercut and rally move right there, where you undercut this low here, and then you push higher. So what else do you need to think about? You know, is it a rule of 3? What does that mean? So if I say, yes, it's the rule of 3, what does that mean? You mortgage your house and you pile into the stock because it's going to keep going higher? Again, you know, kind of a silly thing to ask, frankly. But it's amazing to me how people want, like, there's a green light, red light mentality. It's like, somebody tell me that I have a green light and I can just start buying something, you know. Like, people who ask me these days, and I get a lot of this from a lot of people, which makes me wonder if we're not near a top. Just like that article in the Wall Street Journal today about how short selling, everybody's giving up on short selling, and short funds are now at a low in assets. Maybe that's telling you we're near a top. I don't know. But a lot of people are asking me, what's a good buy in the stock market? So what's a good buy? What the hell do you mean? What's a good buy? Cash? I don't know, you know. But I can tell because people know what I do, and they'll start asking me, you know. And then now I noticed a year or two ago, nobody was really asking me anything. Now everybody's asking me. And also, everybody wants to buy Bitcoin too. So let's take a look at that. You know, but they want to buy it now, okay? So it's already had a huge 5-fold, 6-fold move. Now they want to buy it. It's like, okay, it might work, or it may just collapse. What do you think, Dr. K? Would you be buying Bitcoin here?
Well, the funny thing is that, you know, if you put it back when I was getting it for, you know, single digits.
Yeah, you were in it like back when it was like 5 or something. So that was a time to be buying it.
That was late. I mean, you know, you could have bought it at 0.01. Actually.
Right, exactly.
I put that thing about, you know, it went from $1 to $1 million by the top of 2013, and nothing's ever done that before. There's nothing in history. And yeah, it's now, of course, it's near new highs again. It's approaching 3,000 once again, and you know, because of the fundamentals underlying it, it's going to be, you know, something that's going to make the internet look small, blockchain rather. Forget about Bitcoin.
Well, I
Blockchain.
think blockchain is going to be the basis for future currencies that will be outside the realm of governments. I don't know about Bitcoin per se, because the bottom line here is this thing's way too nutty and volatile to be used as a medium of exchange, because you have no idea if you exchange for Bitcoin today, you have no idea whether you're going to get tagged for a 50% loss, which could easily happen if there's a panic sort of move or governments en masse
We've
move
already
in to
had,
shut it down.
I was actually working on some of this back in
Right.
2014. What it does is it takes the volatility straight out of it, so it matches it with fiat. No, so but Bitcoin can be as volatile as it wants, and you can still get your dollar for dollar on it. But the other thing interesting is that you know the blockchain is basically going to represent Internet 3.0 because it turns every industry as we know it on their heads. But that's a lot of dots to connect and is beyond the scope of this discussion. But I encourage people to go ahead and Google blockchain and find out why this is and why it's going to decentralize everything as we know it. And that means simply that everything's going to be far more efficient than we've ever seen. I mean, they already have decentralized Uber. So Uber's great, but there's going to be a decentralized version of that, as well as Amazon, as well as eBay. But this is, you know, next several years kind of thing. But it's going to be an exciting, brave new world that we're going into. Yeah, again, just for people to look into all the ICOs that are coming out, which are IPOs, but for cryptocurrencies. The business models are beyond fascinating and beyond progressive. So
Somebody wants to know what companies are involved in blockchain technology. I think all of them are. A lot of them.
Every single one is involved in blockchain. It depends on whether they build on Ethereum or this new and improved version of Ethereum called EOS,
right.
or Bitcoin itself. I myself am in love with the Chinese blockchain because it does what Ethereum does, but better. Plus, it's Chinese, and we all know that the Chinese do their own thing. You know, you've got Baidu, you've got Baba, you've got the Weibo. I mean, they're like the Facebook, the Amazon, the Google of China. You know, because Chinese don't like to play with the rest of the world. So the Chinese blockchain, I think, is your best bet. I know at the conference we had, I was telling people to get into Ripple because it was basing out, and then sure enough, I get an email from someone who, you know, I think he put something like 40 or 50K into it, and it became about 2.5 or 3 million because the thing went up about 70-fold from the time I mentioned it. So that's the kind of crazy gains we've seen this year in some of these vehicles.
Yeah.
And there's nothing like that. I mean, I love to be a student of the markets over many hundreds of years, and there's nothing out there that even comes close to this level of appreciation, simply because the fundamentals speak for themselves.
Okay, back to the market. But that's a very interesting sideline, though, because the whole thing is fascinating, especially within the context of the QE. And like we were saying earlier, like Dr. K was saying, I've been saying, we've both been saying this for I don't know how long. The central banks talk about tightening and they talk about ending and they're easing and all this, but they don't. Once they do, you're going to see a bubble bust big time. And when it happens, it's going to be nasty. Because this can't end well. So, you know, my view is you could take a small position in the UVXY, you don't need a big one, and you'll be able to ride that. So right now we're on a buy signal on the BBM, is that right, Dr. K?
Correct.
Okay, so, I mean, it seems like with the VIX down here, what are we at right now on the VIX? The VIX is 9.79, so it's only about 40 cents off of its new millennium high, or I'm sorry, low rather. And every time it's gotten down here, you had a spike. Is that correct?
That's right. Every time. But see, what I like and hate about this market is that, as we were saying before the broadcast, all the odds that were true in the past don't need to continue to work.
They're out the window.
Yeah, I mean, since April, this market has traded in a way I've never seen. It's unprecedented. I mean, you know, micro steps higher and then one-day reversals that wipe out 1 month worth of gains. That is the worst kind of pattern that I could possibly trace out in terms of the VIX volatility model. It thrives on volatility. It also thrives on uptrends. But if you have these micro trends which get reversed in a day, well, it's going to be spinning its wheels. And fortunately, markets always change. You don't stay static like this. You know, this is every year. I remember 2015, wasn't it, that by major media accounts, that was the toughest year in 78 years. And simply because most all the way through August, the year was very choppy and trendless. And that was a very unique pattern for the markets. And that was because of the tug of war between QE, the levels of QE where they stood then, and the hiking rates and things like that, those discussions. Then 2016 came along, and that was perceived to be worse than 2015. But I would argue this year, bar none, this year has been the most challenging. So it's about, it's in the meantime, you got opportunities in stocks which have been profitable this year. You get the undercut and rally, which I think is our favorite weapon of choice when the markets do have these little mini corrections. And so there's always an opportunity to make money. But right now, the lower hanging fruit would be in the perfect, the better setups in stocks, and not so much in trading volatility. Although that said, one thing I've noticed, if you go back 20 years, which I've done even more than that, and if you look at actually the whole history of the VIX, when it has a one-day spike, in other words, the market might have a one-day difficulty, and that's in context. Maybe it was quiet up until that point. That one-day spike in the VIX is usually followed, or at least let's say 55% of the time, by my studies, followed by a second day or a third. Basically, in the next 2 days, you're going to get a follow-through to the upside. So in other words, at the end of the first day, you take a position in UVXY, and you're going to make, based on my studies, you're going to make at least 15 to 25% in like 2 or 3 days. 55, a little more than half the time. But this year, that hasn't happened. In fact, it hasn't happened once. What's happening this year is you got to be more micro about it, micro-tuned using the 620, which works very well, to look at entry points in the UVXY before the VIX even starts to move. So you're getting a very low cost on UVXY, and your risk is pretty minimal using the 620 to buy it. Maybe you risk 2% on the downside, but your upside, if it works, is going to be at least double digits.
Yeah, I've caught some nice moves on the upside.
Yeah, there've been a couple good ones this year. The BBM got in at the end of that first VIX spike, and that didn't work out at all. But yeah, the trick there was buying on the 620 that early that day would have been very profitable. So in other words, the markets are not doing what they've done in the history of the VIX. These are unusual environments. So just because the odds are in your favor doesn't mean it's going to work in this environment. And that, of course, is part of proper trading, is to be able to remain fluid with changing markets.
All right, let's get to some stocks. Stop babbling about all this extraneous stuff. Well, the VIX is not, but market's starting to come off now.
I think there's great time value, as been demonstrated.
Anyways, getting to the focus list very quickly here. Again, we already talked about applied opto. Arista Networks bouncing off the 50-day line. They came out with earnings, I think, at the beginning of August. I'm not sure I want to necessarily own it. That's the one thing, is that we're moving in to the thick of earnings season, and I think you're better off just waiting to see what sorts of viable setups show up as a result of earnings season, such as in the case of Netflix with a viable gap up, and boom, it's trying to go higher. But notice how when it's had other viable gap ups after earnings, and here is one, it hung out for a little bit, and then it kind of trucked higher, and then it gave all of its gains up in 2 days, which was really nice. Here's another one back in January after earnings, and it basically just kind of flopped around and didn't really go anywhere for a long time. So I don't know, maybe does this one get some upside velocity, or does it just kind of hoop out and just do this and flop around? So I don't know. We'll see.
I know, something like Netflix and Amazon, who are, I think, pretty much the two FANG leaders. Well, Facebook's been doing very well too in terms of their price momentum. If we can take the premise that the central banks' hands are tied and they got this QE is at record levels and it has to continue to flow, then the U.S. market will just keep trending higher, having its small corrections here and there or those one-day dropouts. But I think these being the leading stocks should probably overall trace higher. I mean, looking at Netflix, it has a tendency to violate the 50-day, but that also seems to be when you can look into undercutting rally setups and benefit because you're
Well,
getting
that's
it out
what's the
of the.
last place you could have bought Netflix. I think it was during a webinar and pointed that out, and it kept going higher, and then it pushed up through the 50-day moving average, where it was viable again. The question is, you're going to buy it up here? I don't think so. Right?
You're way above the 10-day as well, so it's extended, and if it gets, again, look for it to get closer to the low of the gap up day, and then maybe have an undercutting rally of some sort, because then you risk, again, your exit point. If you buy it up here, where's your exit point? You don't know.
About 10, 12 points lower.
At worst, it's
whatever
the low.
Whatever the low is. Yeah.
Yeah, that's too far. It's
Yeah, so I'm not going to buy it up here. So, but we'll see. Now, Appian, here's another one. It's a new merchandise situation. We liked it down in here, and we're talking about it at that time, and it's gone quite a bit higher. So over 20% it looks like from our original entry points on the Voodoo, and it showed up initially on the Voodoo report. And now you've broken out, but you're kind of flopping around at the 10-day line. So I guess that would be your entry point along the 10-day line from here. Earnings come out, though, on August the 3rd. So the question is, it's had a big move already. If it was me, I'd just take profits, bag the profit, hang out, and wait to see what happens after earnings. So I don't like to play earnings roulette, and you see stocks will get hammered after reporting earnings, or they'll rally. And a lot of times it's just it seems to me like you either have to have a huge profit cushion, or you're just playing earnings roulette, and you might get lucky. Like Checkpoint looked kind of pretty good, breaking out the day of earnings, and then it just gaps down and blows apart. Then we had, what were some other ones? I saw Cyber was looking like it might be trying to turn, and of course they announced earnings and they broke down. And so that leads you to wonder, what's up with this cybersecurity group? Palo Alto Networks maybe trying to base, but they've got earnings coming up when? In the next couple of weeks. So I don't know. Am I going to play there? I don't know. I don't think so. Anyways, getting back to, let's go with Baba, which is going to report earnings on August 10th. Just kind of hanging out and moving higher. So it's acts okay. Can't really fault it. It looks okay. And no real reason to sell. You could use the 10-day or the 20-day as a selling guide, or maybe just this breakout point at 145 if you wanted to. 1,000 is way extended. So, and that thing just keeps trucking higher. And here's where, if they're going to fixate on the rule of 3, here's one attempt here, I guess one breakout, one there, another breakout attempt, and then I guess finally it clears and gets going. So it shakes you all over the place, and then it finally takes off. So, but it's way extended at this point, but notice how the 10-day line is not too far behind. So in this case, you can use it as a trailing stop if you wanted to. So I mean, it's 10% lower, but yeah, I don't know. But it's been running 20% higher, 10-15% above the 10-day moving average for quite a while. So I don't know. What do you do on this one? Earnings are expected on August 2nd, so you could think about taking profits.
Yeah, I mean it's so clearly extended where it's at. Also, this is, I find it useful to look at log charts when you have this kind of situation, because if you look at May, it looks from the linear chart like it's it's in proportion, but when you look at a log chart, you get the percentage visualization. So what you'll see from the log chart is that that the current move is, I'd say, about equivalent to the move in May so far.
Yeah, this is a log chart that I've got here. So there was a prior move, and now it's getting there. Whoa, what happened? Okay, I think
so yeah, it's clearly extended, and taking partial profits, nothing wrong with that. Again, you could trade around the core position using the 10-day as your selling guide for that core, so that guarantees you're going to lock in profits.
Yeah. Okay. Anyways, what else we got? Light is posted a pocket pivot the other day. This was here, and then it just kind of flopped out. It looked kind of like it was going to break yesterday, and now it's coming off again. Kind of extended. at the highs of the range. So I guess if you're going to buy this, you got to buy it on the pullbacks. Now it may just come yanking back in. Who knows? And they've got earnings coming on August 8th. Netflix we talked about. ServiceNow is hanging out. Whoops. Hanging out at the 20-day exponential. They come out with earnings next week, though, so I wouldn't be doing anything with this one. And you can see here how you had this breakout here on weak volume, so that failed. It actually was downgraded here and got a pullback down to the 10-day line. Now it's kind of flopping around, so I don't know. It looks sketchy to me. I'm not a buyer, especially ahead of earnings. Basically, what I want to focus on are stocks that have earnings at least a couple of weeks. Maybe I can catch a move, which of course brings up something like Take-Two. Well, Nutanix actually doesn't announce earnings till October, so that's actually one that I loved. It was a sell, though, I thought, into the, you can see that you just have the 200-day moving average showing up a couple of days ago, and that was near the resistance, but the Bible gap up was definitely actionable, and that was a nice gain, 10% very quickly. Now it's kind of hanging in, watching to see how the 10-day acts as it meets up with the stock, and that may present a secondary entry point, so you might want to keep an eye out for that. But that's worked pretty well. And I know Goldman came out and said, you know, it's the stock is the company could be bought out. And yeah, maybe they could. Who knows? But maybe Goldman has a big client or customer who has a bunch to sell. I don't know. So I would take that with a grain of salt, and also just operate on the basis of the Bible gap up. So now you're pretty clear of everything. I'd like to see the 10-day line move up and present some sort of area of support for the stock. So Viva Systems, they come out with earnings at the end of August. So this is one I'm definitely interested in right now because you've got more than a month to go before earnings. It's hanging tight and volume's drying up. What's our volume level this morning? Minus 77%, below average, so that's looking pretty good. So that's one to think about. That could possibly, it's up 52 cents today. I guess it's in a viable position. Use a 20-day line as your stop. And then Yext, we were looking at earlier, got extended very quickly. They came out with earnings on August 29th. So, you know, that's right at the 10-day line. So that may be in a viable spot right here. So let's take a look at this. $13.74. Let's look at the whoops, 620. So really nothing going on the 620. You got a little bit of a cross, but no stretch. So I don't know. It's trundling along the lows. I guess you could keep an eye on it. If the market doesn't come apart, maybe this is an entry point here, and you've got plenty of time on the earnings. So that's one to keep an eye on today, I think. Somebody says, I think Netflix is old merchandise and lives for earnings reports. I agree with you. It is old merchandise. So, anyways, let's see. Somebody's asking, Pixie bombed out, so there's nothing really to think about it. So I don't understand why you're asking what our thoughts are. Again, kind of a pointless question because, number one, the buy point, as I mentioned in my Voodoo report on an action on this day, was here. And you're using roughly the 9 level as your stop. So when it breaks the 9 level, you've got to be gone. But I remember I was long. I didn't have a huge position in this. I had like 12,500 shares in here, and it jacked for me 10% or so, a little more than that. And then at that point, on this day, I remember it bounced off of the 10-day line. But at this point, I figured it's either going to go or it's going to pull in. So I use a 10 level as a stop, and I got stopped out here. And then it bounces off the 10-day line. Now, if you're buying this thing near here, and that's the only place you bought it, well, once you get the 10-day line, that's your sell point if it doesn't hold up. So, you know, so there's no thoughts. I really like the concept, but it's quite obvious that the market doesn't necessarily agree with that assessment. And so on that basis, I'm not interested in the stock right now until and unless it sets up again. So, you know, that's all you need to think about that. You don't need thoughts or BS. It's price volume action. And you don't know, you know, look at this thing had a run up initially and then it broke down and it set up again and it tried to break out and it failed. And now it's trying to set up again. So these things can go through a lot of different movements before they finally set up and go. And I think trade TTD was a good example of that right off the bat. So, you know, so there's no thoughts that are going to save you on this if you're stupid and slow and you don't have a stop for the position, you know. So hopefully you're not asking because you're sitting in the stock, because if you are, you're an idiot, okay? So, and if you're new to these webinars, I am not shy about telling anybody when I think they're an idiot or they're asking a stupid question, because I think that's one way to learn. I mean, Bill O'Neill used to slap us around good, so I'm just trying to give you the Bill O'Neill experience. And you'd always know when it was coming with Bill, because you'd ask him a question and you'd hear this, like he's trying to relax himself before he lays into you, and then of course, bam, here it comes, smack the truck in his face. And that's basically how Bill used to operate. So, anyways, never purchased. I'm looking for undercut and rally setup soon. Okay, well that's good to know. I always hated, like one time, I don't know, it was in 2011 when we were actually buying silver, the SLV down at like 18 bucks, and it ran to 50, and we put out an email, I think, to members that was a sell point on the SLV, and like a couple of months later, the SLV is all the way back down to, I don't know, what, back to 20 or something like that, and the guy's saying he still owns it, and what does he do now? It's like, well, I didn't want to suggest suicide, but, you know, that does come to mind, but that's just dumb. Anyways, but notice, you know, like I said, YEX had it took some time to set up. You got a similar situation. Cloudera, okay, here's a total blow up after earnings, and the thing just blows to pieces. And it's setting up, and I pointed out that you had an undercut and rally here, and now you're trucking along the 10-day line. I thought it was Bible along here based on my voodoo report at that time, if you guys remember. And it's moved higher, and you haven't had any pocket pivots, so the undercut and rally move around 16 was really the entry point. It's now along the 50-day line, and I guess we'll see what happens with this going forward. So, anyways. I don't know, there doesn't seem to be any real traction with, I've got some SQQQ, I bought some yesterday, and a little bit of the UVXY, and I don't see any traction on any of these right now. They're just kind of flopping around and going nowhere. The market's down 48 on the Dow, the S&P down 2, NDX down 6. So no real breakdowns, but that's how this market's gone. It starts to sell off, and then it finds its feet, and it flops around again. And really the real question is, you know, what stock you're buying, and do you have the right stock on the right day? If you do, like if you have the applied opto on the right day, you're doing really well. If you have light on the right day, you're doing well. But also if you have it on the wrong day, you may not be doing so well. So for example, you know, it's acting well up here, and then it breaks hard here, but you could buy it off the 50-day line, then it runs up, it looks strong here, but then it breaks down, and that's a good, you know, 7-8% difference there in price between the peak here and this low. And so you got to be buying them low and then waiting to see if they'll get some upside momentum. You're getting some today, it looks like, and I don't think I'd be buying it up here though. Do we have, let's see, what's another, Yandex is the last one on the list. And Yandex, basically, Bible gap up, you're 6 days into it. Does this thing need to get going soon, Dr. K, or what?
Look at an undercut and rallying here. I mean, I think it's viable still, and I like the reason it gapped up. It gapped up because of Uber.
Uber's, yeah. So, but that's just news, though. So I don't know. I'm a little skeptical, and it hasn't gone anywhere. So you still like it?
No, I still like it because I think in context it had a fairly large gap up, and sometimes these things will go sideways. But you know, the idea is, of course, buying at as low risk as possible, which would really be the low of the gap up day. So right now it's at 31.5. So you know, what are you risking? You're risking a percent.
30.90 is the low here, and then yesterday it hit a low of 30.66. So you got a little bit of what you might call an undercut and rally move off of the intraday, the BGU intraday low. So that would have worked here. So, and so far that would be working. So I guess you could take a shot at it. I mean, Doesn't seem like you couldn't.
This right now is about what, 2.5–3%, so it's still, you know, within reason. But yesterday was your perfect entry
Yeah.
point.
So, anyways, I want to go through some more of these voodoo report names that I've talked about recently. So Cloudera I looked at. This one is interesting. An IPO, of course, and it has a huge move. Okay, so they come out public and boom, they jam. And what does this kind of remind you of? Maybe Pixie, and then it just blows apart. It undercuts this low here. Okay, and right here, so you get this low, it undercuts that low, and then it rallies. So that actually, you know, you had a couple of pocket pivots. That looked good for a couple of days, actually. And then it just kind of flops out, and the volume's drawing up as it holds along these lows. So I don't know, maybe you undercut these lows first, and then you try to rally out of there. When do they report earnings, Dr. K? Do you have a number there?
I'm not sure. Let me just get a rough estimate. Is end of this month.
End of the month. So I don't know if you want to play in that one right now. So, but you know, the ones that like the Viva and the Yext, possibly in viable positions here. So
Actually, it's an interesting voodoo setup on this NYO. I mean, it's super thin, super micro cap. Normally, you know, we don't tread in those waters at all.
no.
But the price volume is very interesting. So, you know, we're not completely discriminatory just because something is low priced or low market cap. Most of the time we are, though.
I'm just testing it out here. I bought 5,000 and they handed it to me at the offer. So it's not like anybody's in a hurry to punch it out of here, but we'll see. I would try a little bit here myself, just get started. Let's see, where are we? I assume everybody can hear pretty well. I've got a new PC, a new desktop, and with that, I have 2 terabytes of disk space on my C drive. So it'll take a long time before I fill that thing up. So anyways, let's see. Bada bing, bada boom. What else we got here that looks interesting? Oh, Take Two has been on the focus list as well, and that's just, you know, that was viable down here, and you wanted to set up. You know, a lot of people you get these macho men. Number one, you had an undercut rally here, so you could have bought that, and it never undercut that, so you could have been in it. But, you know, days the market's selling off, as stocks come in, people want to buy it because they're macho men. I guess you can do that, you know, I guess, if you have enough hair on your chest and it makes you feel good. But I prefer to deal with things on a more concrete basis. So, for example, once it gets above the 20-day exponential and it holds, I like that, okay? And then you have this next day where you're coming up, and it holds again, you get some volume and it holds, so it's showing support at the 20-day line. And then I remember on this day here, it held up real nice, the volume was drying up, and then it came out. So, you know, you could buy it there, and that would be a good entry. I'd rather buy it there being a little more certain than down here when it's kind of in the middle of everything. So, you know, but I guess you could always use a 50-day as your stop. But I like to deal with things on a more concrete level, and I'm not afraid to wait. And I'll give you another example that worked out pretty well. Was Momo. I actually shorted that one yesterday and ended up making money. It came off the highs, but not a huge amount. But this one is also interesting because, okay, you're undercutting this low and rallying, but you didn't really hold it, and you're bopping around. You come up to the 50-day line in this high, and you're actually wedging. If you see this, you can see that you're going up here and the volume's declining, so you're actually wedging right there. So I'm not going to buy that there. In fact, I might look at shorting it. But what I noticed on this would have been a week ago, Monday, I believe, is that on this day you pulled into the 50-day line. The volume was light in the morning, so right there it's saying buy me, and so you could have bought it right there, and boom, you're getting a nice 10% move. Well, not 10%, say 6, 7, 8% that move up back towards the highs, and now it's trying to trundle higher. And when did they come out with earnings, Dr. K?
I got my earnings thing up. So they are out on the 15th of August. So it was
Now,
fine.
there's some time, but I wouldn't be buying it here, though. I'm just pointing out that, I don't want to try and be a hero. That's because I'm always a hero in my normal life. But when it comes to trading, I don't want to try and be a hero and be buying in here when it's sort of nondescript. You know what I mean? So I will. That's annoying. I think I get more cold callers than anybody on the planet. So what's going on there? Anyways, I hope nobody could hear that too much. YNDX just undercut the lows. Right, we saw that on the chart. So anyways, so that's an example of one. JD, here's another one. Trying to come back. And maybe it is going to come back. I don't know. You got one breakout attempt, two breakout attempts. This one, it's not really working, but the breakout point is actually around here. So you cleared it the other day, and so that looks okay right there. So now it's trying to pull in. When are earnings out with this one? In August, Dr. K, right?
Yeah, I think so. Let me just confirm. August 9th.
Yeah, so you could try and play it, but I think trying to buy it off the 50-day line was probably better. I was a little skeptical that this would work because you failed twice. But in this market, if the market's going up, then you just step in and buy the thing. And if you have a reference for the 50-day line as a stop, then you can come in after it. So some of the other names in the group, Netties, for example. I'm not so sure what to make of this. I mean, it is a failed breakout. It's got two failed breakouts in the pattern, one here, and now it's just kind of flopping around at the breakout point. And I don't know what to make of this. It tried to go higher the last couple 2 days ago, and then the week before, and it got turned back around. So I don't know. Bobak's okay though. That one's fine. What's another one that we've liked but is off those? Weibo is trying to set up again. And again, this was actually a moving average undercut and rally. It tried here and failed, so you could have played with that. I don't know why this thing keeps going back to. So it tried here and failed, but this one worked, and you could have gone after it on that day. So you might try here and fail, and you get out at 68.50 or something, and then you're buying it back closer to 70. But it doesn't matter where you bought and sold it. You just go on the basis of what you're seeing on the chart, where the 50-day moving average is and where the move back up through the moving average shows up. So market's still flopping around. I guess you could see anything happen. But we've got all these earnings reports next week. Google, Amazon, Facebook. When is Twitter? Isn't Twitter happening pretty soon?
Yeah, it is.
Somebody's asking, how about the goose? I like the goose, actually, and I think the goose is, the earnings are coming up soon, though, so I'm a little wary about playing earnings roulette with it. But you will notice, and I've talked about this, you're watching to see if it can get back above the 50-day moving average, and it's done that over the past 2 days. You had a 5-day pocket pivot here yesterday, so it's trying to do it. I don't know if it's going to work, but it's trying. So, yeah, I tend to like it more in this position than I would up here, okay? And because in IPOs you come all the way back to this breakout area. I think that was. Let's take a look. Whoops! Holy cow! What just happened? What is that big black
hole?
Yeah. So you have this breakout point, and it comes all the way back close to that breakout point, and it forms a new base. So I like that sort of a setup, and it's something I look for all the time. And you're getting that in goose. In fact, you could have, on the basis of this gap fill, I mean, you could have come in here if you're using a stop, maybe down here. That's a possibility too. But I think now that it's above the 50-day line, when are earnings due on this turkey? Or goose, rather. Sorry.
Goose is coming at. Nope, that's not it. Huh, no, this, for some reason, this app doesn't have goose.
Let's see. I'm going to whip it out here. Usually get it on HTSI. No, they don't show it either. So I don't. Anybody know? Anybody know? Goose 8-4. Thank you, Andy. Goose is on August 4th. So I don't know. That's week after next. I guess you could try and play it for a move. Maybe it does jack to maybe 22 or something. So I'm noticing the YEX. I bought, like I said, I just bought 5,000 at 13.75, so they filled me at the offer, and now it's offered at 73. So when you get 5,000 shares, boom, boom, like that at the offer, it's usually telling you that there's a little bit of selling in it. So it may come down and come back into the 10-day line is actually 13.67, which is a whole nickel lower about. So I guess we'll see. Okay, we got 5 minutes left. Any brilliant questions? Oh, somebody says. Somebody else is saying 28. 8-4. Who's right? I don't know. Call the company. In any case, you can see the setup, and you can try and if you want to play it, I guess you could. But the other thing is keep an eye on this market. I'm just a little bit skeptical of the ability of this market to keep going without a pullback in here somewhere. And I still think there's so many systemic problems out there that we're susceptible to a bubble bursting at any point. And a lot of that could be just caused by a catalyst somewhere. And so I think, you want to maintain this approach of taking profits when you have them and selling into extended strength like on the applied opto. And yeah, I know it may go higher, but I think you can't really complain because I think we saw that thing turn at around 63 or something, and you get almost a 50% move, probably just about that, in just a couple of weeks. So, it's sort of like, what do you want, So, I don't know. Somebody's asking, which companies are involved in blockchain technology? Are you asking? No, wait, I'm sorry. Is that, Scott, are you asking that again? But all companies are. I don't really think it is in and of itself an investment theme because it's basically something that everybody's using. It's a lot like Hadoop.
It's like saying
dealing with Hadoop, and
it's like saying in the 90s what companies are involved in the internet. You got to be selective about who's going to outperform.
Anyways, but I don't know of any specific stocks that are.
No stock. There are no stocks.
Specialize in blockchain. It's sort of a more generalized technology.
There are no stocks that.
Yeah. So, and it's not the technology itself that's so great. I think. I think it's the currencies themselves that are probably the better plays, rather than trying to play some blockchain technology thing. So.
Well, really, it's beyond the scope of this discussion. But look up the difference between what crypto coins are and what the blockchain is. They're one and the same. They're completely have nothing to do with the stock market. They're completely different animals.
Yes. Okay, so we've got somebody's asking about AYX. I'm not sure what there is to ask. You had a pullback to the top of the base, so if you wanted to buy it there, you could have bought it. I liked it in here. If you guys remember, I was actually buying a whopping 5,000 shares right along here a couple of webinars ago, and stock has moved higher. So it's a little bit on the thin side, but again, you have a breakout, you pull back to the top of the base, and that's a buy point because you can keep your risk to say, what's the high here, 20.49 or 20? So that's reasonable. So, anyways, let's see, any more amazing questions? I don't know. This is kind of like watching grass grow right now. I wish something exciting would happen. But I'm not seeing anything looking all that hot in terms of something I want to jump all over. Okay, now the YEX is pushing up. Are you guys in there buying it for me? Is that the deal? I appreciate that. All right, now I'm going to come in and buy 50,000 shares. Didn't budget. No, you would have seen that. FireEye is, before I was talking about security names, cybersecurity, FireEye tried to break out, but of course you don't buy breakouts. Volume's pitching in, you're coming into the 10-day. Maybe that's one to look at. Don't they announce earnings pretty soon here, though? Like next week?
FireEye is on August 1st.
Yeah, so I'm not so sure. And then, of course, you have Fortinet, which is next week. And that one's acting okay, actually. If we go up here, we can take a better look at this. Yeah, I mean, this could have been bought down here. You had some pocket pivots, but very wild action. And it's trying to break out, but they come out with earnings next week. And I'm guessing that you're not going to see too much going on here until earnings come out. So I don't think you really need to mess with it. Um, Palo Alto Networks I do like. Do you guys prefer these charts or you prefer the e-signal ones? I think I'm going to use these. I like them better. They're not real time though. But Palo Alto, it kind of looks like it's in a viable position right here. So I don't know. I don't know. Other names I'm looking at. Let's see. Quintana. Do you guys remember Quintana? Quintana, I'm sorry. I want to call it Quintana. But this one's hanging out. The only problem here is you have earnings in mid-August. So it's just sort of hanging out. Maybe it's going to pop through the 50-day. I would watch for that. Maybe it becomes viable on that basis. So, but I don't know. Okta is another one. You know anything about this one? This one's, I liked it down here. You have the undercut and rally. I think I discussed this in the Voodoo report. And you have since gone higher. But you're up to the 50-day moving average now, so I'm not so sure. You know, you don't want to be buying here. You want to buy it up the 10-day. And notice how it did get some nice support this morning off the 10-day moving average. So, anyways, I don't know. The market's flopping around. The UVXY really is not up very much at all. In fact, because it was recently split 1 for 4, if you look at it on that basis, you're only up like 3 to 4 cents right now on that. So I don't know. Maybe that means it has a big move ahead of it. I don't know. I'm still sitting here with it though. There was a 620 buy signal earlier this morning, pre-open. And that was down here. It actually came up. You had a buy signal here, and you had a cross on both just around 5:30, 5:25 this morning. So for me, that was a decent entry point, and still sitting on it. I would say the action here is just kind of nondescript. No, you're not really getting a clear sell. It's just kind of chopping around, not really doing anything. So I don't know. We'll see what happens. I guess it's all going to attempt to go one way or the other based on what the general market does. So you just kind of want to watch out for that. Somebody's asking, what app do you use to find EA date? I use HGS Investor myself, or you can just go to briefing.com. What do you use, Dr. K? You have an app or something, a magical app?
Nothing magical about it, but it's called Earnings. Look for Earnings. It's a beta version, so I don't know if it's available. But I told the guy I'd be happy to trial it out for him, and so far it's been.
But you can get the date on HDSI. You know, on the charts they usually have it. I don't know if you guys can see this, but it's right here, earnings due date, and it's pretty accurate. But I would always also check briefing.com. We'll have it, and also you can go to the company website, and they'll also have it. So, anyways, it's after 10. I think we've covered everything we need to cover. It's just a matter of focus on your small list of long ideas that you like, and look at them when they're coming into areas of potential support, and you take your shot. And in the meantime, I'd maintain some tight stops. Just make sure you're buying things at areas of logical support, and you should be okay, because if things don't work, you can bail out. But you definitely don't want to be buying things in extended positions. And in the case with something like Applied Opto, you can always use the 10-day line as a maximum trailing stop, or you could sell into this move and take your profit, depending on your preferences. So, I think it's just a matter of knowing where your out points are, knowing where your trailing stops are, knowing where your profit objectives are, and then acting accordingly and just sticking to it. Don't get frozen if the market starts to blow to the downside or something. Act on the basis of what you're seeing based on your trailing stops and profit objectives, and I think you'll be okay. I don't think you get in trouble, although I'm thinking we may be headed for something before the end of the summer that's going to be very exciting on the downside, but we'll see. This market will try and fool you, and there is still all this QE. And I think the further we go along, the more it becomes obvious that the Fed is not really going to be raising rates, because if that's the case, why would the dollar be just tanking the way it is? And that's a pretty big move for the dollar. So, it doesn't look happy to me. And you got to ask yourself, what is that telling you? I think it's telling you the
Look
Fed
at the
probably
dollar.
doesn't. What?
If you look at a monthly chart of the dollar, the slope of the curve is quite pronounced this
Yeah,
year.
it looks
Really
like.
far more steep
Yeah, so
than
it
before.
doesn't look to me like you've got QE forever coming here, or I'm sorry, that you've got interest rates rising, and more like QE forever is the situation. But of course, at what point is the Fed pushing on a string? And I think if it is, and we run into some financial crisis, they have no leverage, they have no bullets left, and that could create a really nasty sell-off. So I think you just want to be nimble, and like I said, stick to the low-risk buy points and know where your trailing stops are, know where your profit objectives are, and act on them. Don't allow yourself to be swayed one way or the other by the index action and the ebullience of the crowd right now, because everybody is pretty ebullient. So like I said, I get people asking me now, what's a good buy in the stock market? Which is a question that's just Greek to me. Anyways, you guys, thanks for showing up. We'll catch you next week. Have a great weekend.
So long, everyone.